Hey everyone, I'm Michael. Tonight I want you to picture something with me. It's 1998. The internet's blowing up. Every day new companies are popping up with .com slapped on the end. And honestly, people think they're about to get rich overnight. You put your savings into a couple of tech stocks. Maybe it's Yahoo. Maybe it's pets.com. And for a while you feel like you can't lose. Your money doubles, triples. You're a genius, right? Then bam, the year 2000 hits. It's chaos. The market drops harder than anyone's ever seen. Investors, traders, everyone's stunned. When the dot-com bubble burst, the NASDAQ lost almost 80% of its value. Less than half of all those shiny new internet companies survived. I watched friends lose millions in days. Even though I saw it coming, my portfolio still took a beating. And here's what's wild. The internet was the real deal. It changed the world. But the hype, the overconfidence, the this time is different attitude, that's what built one of the biggest bubbles in history. Why am I telling you all this? Because standing here tonight, I'm getting that same feeling. But now it's not the internet, it's AI, artificial intelligence. People are calling it a once-in-a-lifetime shot. And you know what? Maybe they're right. Or maybe, as Mark Twain supposedly said, history doesn't repeat, but it often rhymes. Every generation thinks their moment is special. But John Templeton nailed it. The 4 most expensive words in investing are, this time it's different. So here's the real question. Is this time actually different? Or are we just blowing up another bubble, this time with AI? My name's Michael, and on Investor Voice, I don't do hype. I do reality. I do strategy. So before you start throwing money around, let's hit pause. Let's talk about the 3 hidden forces driving this potential AI bubble, why they actually matter, and how you can protect your money, and maybe even come out ahead. Let's start with the first force, concentration. Right now, the fate of the entire U.S. stock market, yeah, your 401k, your IRA, your index funds, pretty much hangs on just 7 companies. People call them the Magnificent Seven. That's Amazon, Microsoft, Alphabet, which is Google's parent, Meta, Apple, Tesla, and NVIDIA. Together, these 7 make up about 36% of the entire S&P 500. Think about that for a second. Over 1/3 of the whole market's value is tied up in just 7 names. And every single one is in an all-out battle to win the AI race. Here's the deal. Even if you just own a simple S&P 500 index fund, you're already making a huge bet on these companies. Your future gains? They're riding on how this plays out. Every dollar these giants pour into AI ripples through the entire economy, from chip makers to energy companies, all the way to your own portfolio. And when you see how much money they're putting on the line, you'll get why this concentration is such a big deal. Let's break it down. Tesla's planning to spend about $5 billion this year on self-driving tech, and Elon's AI startup, XAI. Apple's dropping $10.7 billion trying to make Siri smarter, and honestly, Siri needs all the help she can get. Meta's going all in with $60 billion on data centers and the metaverse. Google is throwing $75 billion at reinventing the internet with AI. Microsoft, $80 billion for OpenAI and supercomputers. And then there's Amazon, spending an eye-popping $100 billion on AWS to own the backbone everyone else depends on. Add it all up, and you get $330 billion just in a single year. That's more than Finland or Portugal's entire GDP. All that cash is going into building what some people are calling the fourth industrial revolution. And look, it does sound thrilling. But here's the twist. This massive spending spree is basically what's keeping the U.S. economy from slipping right now. Take it away, and we'd probably already be in a mild recession. So the real question is, how long can this last? By the end of this year, global AI spending will hit $500 billion. And by 2030, the electricity bill for running these data centers could blow past $3 trillion a year. That's how high the stakes are. These companies are desperate to win, and honestly, I get it. The IMF says about 60% of jobs in developed countries are staring down the barrel of AI disruption. That means a ton of jobs could either change completely or disappear. Whoever nails this technology first basically gets to run the world. Mark Zuckerberg even said something like, even if Meta wastes $200 billion on AI, it's worth it. If we move too slow, we're dead. The guy isn't messing around. But this isn't just a corporate arms race anymore. It's countries too. The US and China both see AI as their ticket to global power, and they're burning through billions trying to make sure they come out on top. For regular investors, all of this creates a real crossroads. If AI lives up to the hype, the next decade could look like the internet boom all over again. But if the profits don't show up fast enough, the same stocks making you money today could just as easily tank your portfolio tomorrow. That brings me to force number 2, the money machine. When I first dug into this, I honestly couldn't believe what I was seeing. There's this thing happening in AI right now that some people call the AI Money Machine, and it's got me worried. Let me explain how it works. First, you have chip designers, Intel, AMD, and the king of the hill, NVIDIA. They create and sell the chips that make AI possible. Then there are the AI companies like OpenAI and XAI. They buy those chips. Next, you've got data center companies. Think Oracle and CoreWeave. They buy chips too, but then turn around and lease out their computing power to the AI companies. They're basically the middlemen. On the surface, everything looks normal, but dig a little deeper and the red flags start popping up. Here's what happens. Microsoft's investors hand $58 billion to OpenAI. OpenAI then gives much of that money right back to Microsoft to use Microsoft's data centers. Microsoft uses that cash to buy NVIDIA chips. Then NVIDIA turns around and invests some of that money back into OpenAI. See what's going on? The same money is cycling through all these companies, and each one gets to count it as revenue, which pushes up their stock prices. It's like me paying my friend $1,000 to dig a hole, then he pays me $1,000 to fill it back in. We both say we made $1,000, but nothing real got created. Now I'm oversimplifying. These aren't fake companies. They're selling real stuff. But the main idea fits, and it's only getting wilder. OpenAI just signed a $300 billion deal with Oracle, right after Oracle announced plans to spend tens of billions on NVIDIA chips. Then NVIDIA agreed to invest up to $100 billion back into OpenAI, but only if OpenAI keeps buying their chips. NVIDIA's the real winner in all of this. Since ChatGPT showed up, their stock has shot up more than 16 times. They sell their chips to just about everyone: Microsoft, Meta, Google, Amazon, OpenAI, Oracle, you name it. Then they go and invest right back into the same companies buying their stuff. It's like they're paying their own customers to keep the orders coming in. That kind of loop just keeps demand sky high. But here's the big question. Is anyone actually cashing in? OpenAI is supposedly worth around $500 billion, but it's only pulling in about $12 billion in revenue and burning through cash every month. That's the real issue. AI companies aren't making nearly enough to justify these wild valuations. Will that change? Maybe. ChatGPT alone gets used by 700 million people every week. That's a ridiculous amount of eyeballs and data. Imagine what happens when Sam Altman finally flips the switch on ads or lets brands pitch products right inside your chats. That could be huge. But for now, it's all just a bet on what's coming, not what's here. And that leads to the next big thing, the data wall. AI has been getting better at lightning speed. Just a couple years ago, AI-generated videos were a joke. Now, some clips look almost real. It's kind of hilarious that Will Smith eating spaghetti became the gold standard for AI progress. But here's the problem. The stock market is banking on that insane pace to keep going, and we're starting to hit a snag. For years, AI has been gobbling up every bit of public data it can find. By 2027, it's probably going to run out of fresh, human-made content online. That's wild. Think about it. The stuff we've been feeding these models took centuries to create. All our books, research, everything. No wonder the progress felt so fast. We dumped our entire collective knowledge into these things. But once that's gone, what's next? If AI companies can't figure out how to move past this data wall, progress could slam on the brakes. Expectations would tank, and the bubble everyone's betting on could pop. Can we get past the data wall? Maybe. People don't have this problem because we learn by living, not just by reading or watching. We learn from screwing up, from talking to people, from just being in the world. If AI tried to give this talk tonight, it couldn't. It hasn't lived my life, made my mistakes, or had my conversations. My point of view comes from experience, something you just can't fake with more data. So getting past the data wall isn't about just piling on more information. It's about a whole new kind of data. That's a real scientific hurdle, and honestly, nobody knows if or when we'll clear it. So where does that leave us? I started off comparing this to the .com bubble. Is it the same thing? Not exactly. The big difference is today's AI companies actually do useful stuff and have a clearer shot at making money. Unlike the .com days, it's not all hype and no business model. But does that mean there's no bubble? Honestly, I still think there is. Just look at what's going on. Inflated valuations, money swirling in circles, global hype, limits to how big this can get. The tough part is, nobody knows where we really are in the cycle. This could be the beginning of a wild decade, or we might be closer to the end than anyone wants to admit. So, what should you actually do with your money? I'm not a financial advisor, so don't treat this as personal advice. But if I were in your position, here's what I'd care about. First off, just keep investing. Seriously, don't try to time the market. If this really is the start of a bubble, today's prices could look cheap in a few years. Set up automatic investments. Put money into a broad, low-cost index fund every month, no matter what's going on. I did this back during the .com bubble. Yeah, my portfolio took a hit when everything crashed, but I never regretted sticking with it. The market always bounces back, it just does. The big thing is, don't panic when your portfolio drops. If you're in an index fund that tracks the whole market, a crash is more like an opportunity, as long as you have the guts to keep buying when things look rough. Next, don't put all your eggs in one basket. Diversify. It sounds basic, but it matters. Right now, tech stocks are way too dominant. So, check out equal weight index funds. They spread your money out more evenly. Look at small cap stocks. They're actually undervalued compared to the past. Dividend-paying value stocks, they usually handle downturns better. And don't ignore bonds or even things like gold. In uncertain times, people appreciate real physical assets. One more thing, work on growing your income. Your paycheck is really the fuel for building wealth. Get a promotion, start a side hustle, pick up a high-value skill, whatever gets you more money to invest, especially when the market drops and deals pop up everywhere. Honestly, if this bubble bursts, it won't be the end of the world. It'll hurt, sure, but for people who know what's going on, it's a chance to get ahead. The trick is not to panic. Be the one who saw it coming, the one who stayed diversified, kept investing, and kept your eye on the long game. Thanks for hanging out tonight. If you got something useful here, share this video with a friend who needs it, and hit subscribe to join the Investor Voice community. We're all about cutting through the noise and focusing on what actually matters for your financial future. Tap the bell so you never miss a strategy session. I'm Michael. This is Investor Voice. I'll catch you in the next video. Take care of yourselves and your capital.